Away from the markets now, data from the UK's Office for National Statistics released today shows that the UK's inflation held at 3% in January as downward pressure from auto fuel and food prices were offset by the cost of attractions such as zoos and gardens. Consumer prices fell 0.5% from December, just like in January 2017. Annual core inflation accelerated to 2.7% from 2.5%. The Bank of England expects inflation to subside this year as the effect of sterling's 2016 depreciation fades. Well, back here in Africa now, Zambians have woken up to an increase in the price of fuel due to rising international oil prices and the depreciation of the kwacha. The Energy Regulation Board explains that the pump price of petrol will be increased to 13.75 kwacha per litre from 12.97, while that of diesel would rise to 12.01 kwacha per litre from 11.09. The kwacha is down nearly 3% year-to-date against the dollar, mainly dragged down by a recent slump in global copper prices, which is the Southern African nation's chief export. The price change took effect from February the 12th, 2018 at midnight, and the ERB says the hike would ensure security of supply. And now Angola's central bank has given commercial banks the sole responsibility of selling foreign currency to the public. The National Bank of Angola would sell forex only to large importers of essential goods. The Southern African nation in January abandoned the Kwanza's peg to the US dollar, devaluing it by 10% in a bid to attract capital to the oil exporting country, which was hard hit by a slide in global crude prices. Since the peg was abandoned, the Kwanza has lost over 20% of its value to the dollar, while persistent shortages of foreign tender over the past half-decade have seen a currency black market flourish. Over now to South Africa, where the rand slipped against the dollar in early trade on reports that the African National Congress Executive Committee had given the embattled President Jacob Zuma time to resign. The rand traded at 11.95 per dollar, off highs of 11.99, but weaker than Monday's close of 11.88 to the dollar. The currency had strengthened on signs that Zuma could be ousted even before his second term as president ends. But there's some good news, however, for South Africans, as unemployment rate fell to 26.7% of the labor force in the fourth quarter of 2017 from 27.7% in the third quarter. What this means, according to the Statistics Office, is that 5.9 million people were without jobs in the 3 months to the end of December 2017, compared with 6.2 million people the previous quarter. The expanded definition of unemployment, which includes people who have stopped looking for work, fell to 36.3% in the fourth quarter from 36.8% in the previous quarter. In the meantime, South African miner Exxaro Resources has announced plans to pay a special dividend of 4.5 billion rand, which is about $377 million from its income reserves. This comes after the firm sold a stake in U.S. titanium products company Tronox. The dividend represents 12.55 rand, or about a little over $1 per Exxaro ordinary share. Exxaro considered its growth prospects, future capital commitments, the repayment of debt, and the return of capital to its shareholders. In October 2017, the company announced the completion of the sale of 22.4 million shares of Tronox, with net proceeds of $474 million. Well, there's more from South Africa, but this time, the mining company Harmony Gold has declared a 49% jump in half-year profit, boosted by improved performance at its South African operations. Headline earnings per share rose to 2.24 rand per share for the 6 months ended December the 31st, 2017, from 1.5 rand per share. The group, which has operations in South Africa and Papua New Guinea, saw gold production for the half-year period tick up to 560,000 ounces compared to 553,862 ounces in the previous period. Meanwhile, the South African government has given Harmony the go-ahead to mine at its newly acquired Moab Khotsong mine in the north of the country. Harmony says that in December, it would acquire the mine from AngloGold Ashanti for $300 million to boost its operational cash flow by 60% and provide substantial cost savings. Well, let's see how the commodities markets are performing today, beginning from the crude oil market where prices are higher, lifted by a rebound in global stock markets that followed sharp falls last week. U.S. crude futures were at $59.44 a barrel in early trade, and that was up 0.25% from their last settlement. Brent crude futures were at $62.78 per barrel, up 0.3% from the previous close. With calm returning to the market, oil traders say attention is turning to inventory levels to gauge crude supply levels, as a change in inventories this week will be very crucial for determining whether further declines in the oil price are on the cards. In the meantime, the private American Petroleum Institute is due to publish crude inventory estimates on Tuesday, while the government U.S. Energy Information Administration is set to release its fuel storage and crude production data later today. We're staying with the commodities market, but this time at the precious metal segment, where gold prices are firm on Tuesday, and that's boosted by a weaker dollar, while investors wait for U.S. inflation data for clues on the pace of interest rate hikes. Spot gold was barely changed at $1,322.82 an ounce in early trade. On Monday, it rose 0.5% in its biggest one-day percentage gain in more than a week. U.S. gold futures were down 0.1% at $1,324.06 per ounce. After this timeout, we'll look at Nigeria's mutual fund market when we return in a moment. Do you stay with us?